Hello and good morning everybody. Welcome to the Gold and Silver Club end of week review. So for those of you who are joining us this morning, welcome. Today we'll be reviewing the latest developments in the commodities markets and analysing the week's performance. During this live session we'll be covering an end of week summary for gold, silver and commodity currencies. We'll be looking at the top trades of the week. We will be covering live market commentary and technical analysis. We'll look at the week ahead, key events looking forward. So it's been another very active week for the gold and silver markets. Plenty to go through with you today. So we'll get cracking. So the headline news really last week from the 25th of January through to the February the 1st, we had a few major announcements. Gold and silver prices rise on surprise drop in US growth. So that was quite an occasion on Friday, and we saw a big spike to the upside on gold and silver. So on Friday the 1st of February, the US Department of Labor announced the economy added 157,000 jobs in December, which was slightly below expectations, and whilst the unemployment rate rose to 7.9% from 7.8% the previous month. So this eagerly awaited news announcement weakened the US dollar, and it created an inverse effect on commodities. So it drove gold and silver and the commodity currency prices right up. So we had some fantastic trading opportunities on Friday. And earlier in the week, on Wednesday the 30th of January, the Federal Open Market Committee held its first meeting of 2013, after which the FOMC chairman, Mr. Ben Bernanke, announced the US Federal Reserve would keep short-term interest rates near zero and continue its monthly $85 billion bond buying stimulus program, which again it pushed up the gold and silver prices. This seemed to be priced into the markets during the day. For those of you who subscribe to our newsletter, you will see the full YouTube video of how we actually traded that move. Really big move that we had on from selling short on just Wednesday evening last week. So the big question for everybody: will gold and silver prices continue to rise this week? So we'll be looking at that very shortly. Okay, so for those of you new to our webinars, just very briefly a little bit about myself and Nick at the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the biggest financial markets in the world: Forex, gold, silver and oil. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. And I'm a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Cowsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment bank. It's through his first-hand relationship with some of the world's most successful traders that Nick discovered the formula, mindset and tools to give any individual the definitive edge to make money in any economy. He also regularly writes for a number of global business and financial publications and appears frequently on financial television. Here's us recently just on Swiss television, Dukascopy TV, giving our analysis on the gold and silver markets. And here's just a few of our recent publications in Global Banking and Finance Review, International Life and the South African. So that's just a little bit about myself and Nick. So we're just going to cast our eye over at the moment and have a look at the gold price. So currently gold is, we're getting a little bit of a pullback just this morning, actually coming towards to test an interesting level at the moment. So we'll look at that very shortly. So the gold price right now is $1,662 per ounce. Okay, just to gauge where we are at the moment. We had a spike all the way to 1682 on Friday, and we came and tested this 1660 level. So we'll look at that. We've got some interesting price action just this morning as well, actually. So we'll move across to that very shortly. Okay, so before we do that, we're going to look at the top trades of the week using the Gold and Silver Club's signature trading strategies. Okay, so you want to cast your eye over to silver. So this was Silver, nice move on silver that we had. This was a long position, so you can see hopefully on my screen, we'll show you on the live charts as well, this level of support that we had on Friday throughout the day that we didn't break through at the 31.31 level. We're also supported by a Fibonacci channel there as well, and we had a nice entry point, good risk to reward, so 20-point risk, and we actually made a really nice 79-point profit on that. You can see where we came out just towards the end of that Fibonacci channel as well for 79 pips. So for 20 pip risk, for each lot we traded was 200 risk, and for each profit there was $79, 790 profits for a 4-to-1 risk to reward. Okay, so here we have, this is a sell short opportunity we had from the Federal Reserve announcement, which is on our live trading video you can watch, which is also on our website, where we traded the Federal Reserve live. So this was our pound dollar shorting this after the Federal Reserve announcement. So we came to test a fib level again, a major price action level, didn't break through it. So entry was at 1.5874, exit was at 1.5776 for a nice 98-point profit. So 15 pips there for $150 risk and reward for one lot at $980 for a 6-to-1 risk to reward on the trade. And here we have, this was the non-farm payroll, so this was the news trade on gold. So on Friday we had a nice entry point at 1660. You can see there actually on the screen, highlighted in blue, was our entry level. Again, very nice tight risk to reward on that trade. We were looking at a risk of 50 pips on that trade, and as soon as the news broke, the federal, as soon as the non-farm payroll news broke on Friday, we had a big spike in price. We came all the way up to our take profit level, so we took profit 1679 there. So 50 pip risk. Each lot we traded was 500 risk, and for each profit target we hit there, 190 pips worth of profit. So we had 1,900 in profit just from the each lot we traded for a 4-to-1 risk to reward. So there's the gold move that we had on Friday during the non-farm payroll. In fact, the price came all the way back down again, retested 1660 afterwards, allowing us to get in again, and then the price actually later on finished just below 1674. So really nice profitable trades on gold on Friday. USD Canadian dollar. Again, this was a nice entry point, bounce, and a dragonfly doji or hammer candle, very strong candle, which was a buying opportunity off this price action level. So we had a nice tight risk on this, 15 pips risk. So for each lot we traded 150 risk, and we just came out. You can see our take profit target where we've just come out there for 44 points. So for a 3-to-1 risk to reward, sorry, 44 pips. So for $150 risk, and we came out at 440 in profit for a 3-to-1 risk to reward. So that's USD Canadian dollar, which we know moves the inverse to gold and silver. And finally, Australian US dollar, which nice trade set up there as well on Friday. This was just entered in on Friday morning before non-farm payroll. We bounced very nicely again off a key price action level and a Fibonacci channel using our lighthouse strategy. So we came in there at the 1.0364 level, and you can see we came out at 1.0416 just after the news broke for non-farm payroll. So we reached our profit target very quickly there. 14 pip risk on that trade at one lot, 140 risk for a reward of 52 pips, so 520 reward. So for a nice 4-to-1 risk to reward. So those are some of the top trades of last week on gold, silver, and the commodity currencies. And I'll take you across to my screens now, and you can see exactly what is going on with the markets at the moment. Okay, you should be able to see at the moment the gold chart on the screen, so I might just confirm that with everybody. Everybody can see the gold chart currently. You can see my screen okay? Great. So what we're looking at the moment, we are currently looking at gold. And here you can see the move that we had essentially on Friday. So we just, let me just make this a bit clearer for you on the screen. Okay, so here is the move that we had on Friday. We're actually coming down to retest the 1660 level again. You can see we're sort of following this channel as the price is coming upwards here on gold, and we're coming back to test this price action level, the 1660 level again. So you can see this is where the price actually was on Friday in the morning. We're at 1660. We had a spike all the way up, which came out to our profit target 1682 there, and as soon as you saw, other traders were definitely taking profit at this particular target because the price just came all the way back afterwards. Profit was taken, reversed, and bounced very clearly of 1660. So this is quite a good level to be watching at the moment. We're obviously coming down to retest 1660 this morning. We just put that in a slightly shorter time frame so we can see here where we are coming down to test 1660 level right now, in fact, which has presented some very good support throughout Friday last week. So certainly a key level to watch this morning as the price is coming down. So do keep an eye on that with gold. Currently we do seem to be stuck very much in this sort of sideways 1650s to about the 1690s on gold at the moment in this consolidation phase currently. So these are some key levels to look at currently with gold. If we move across to silver, we are actually we're coming down a little bit today in price, but you're seeing we're actually bouncing off. It's a bit uncanny. We're bouncing off a similar level to non-farm payroll Friday as well. So we're currently bouncing off this 3130 level on silver. We're moving up with our Fibonacci channel as well. With the price, you can see where we had a nice, this is where we entered on Friday for a non-farm payroll trade, 31.30. This held nicely and we came all the way up and we hit our profit target. So that was the 75-point trade. The price has then come all the way down and it's just reversed overnight and it's come down. We're just testing this it's the 31.40 level at the moment, thereabouts, where we're currently testing on silver. And in terms of the overall picture, I'll show you what's going on in terms of where we are in terms of the overall trend here. Actually, let me come back to you. I've got another slide which shows you the overall trend. We're going to that very shortly. Australian US dollar. So here's the move that we had on Friday. So going to Australian US dollar, we have had a little bit of a sell-off last week. We came down. We tested some major supportive levels. We did get supported. So highlighted in blue here, you can see this is the entry point that we had just on Friday, just before non-farm payroll. So we've just been supported at this this fib level here, which is 1.0364, and we've also been supported by a channel, and we just reversed. We came all the way up, and you can see where we're taking profit, and we're actually now testing this upper channel again. Let's go across New Zealand US dollar. New Zealand US dollar, really interesting one. So New Zealand US dollar at the moment is actually testing about 1.5 year highs at the moment, and we are struggling to break through it. We are starting to see some headway towards potentially breaking through this level, but it's not enough confirmation yet, and there could be. It really needs to. Well, I suspect we're going to get high momentum move either way soon. Either the buys are going to run out on New Zealand US dollar, and we're going to start to see quite a big move to the downside potentially. If that happens, and the sellers obviously start to take control of this market. If we continue to rally on this market, we will see a breakout, and that will be quite important because that will be a breakout of really 18-month highs for New Zealand US dollar. So if we just go into the sharper time frame, we did have a little bit of a breakout to the upside just last night, and this was very shortly followed by a sell-off. I think it was just around 30-40 points, nothing too major. Yeah, about 40 points to the downside, and we're just consolidating right at that level of resistance at the moment. So we're following New Zealand US dollar very closely at the moment, very interested if we're going to break out to the upside or whether we're going to sell off, because we know if this does form a new level of resistance again, the risk to reward on these sort of sell-off trades are pretty large. But you want to just monitor that closely, and always, of course, keep your risk management in check. We're going to just go across now to pound dollar, actually. So pound dollar, interesting move just last week as well. We had quite a big sell-off. We've come down and we're getting near key price action level. We're near sort of the lows over, well, certainly the 2013 lows, but overall we're getting near to the lows of the last 6 months or so. You can see here where we did have quite a nice price action bounce just last week on the 28th of January, which we did have to move in the end. We were only trading up to this next price action level, 140 points. You can see where we've actually reversed. This was level of resistance here that we just didn't break through, and the price has come all the way down. And yeah, currently with pound dollar, we're just really looking to get a sense of direction this week, whether we're going to start to get a retracement and get some sort of recovery on pound dollar, or whether we're going to break the lows of 2013, which could see us go quite a bit lower on pound dollar if those levels are broken. So that would be about the 1.56734 level that we'd be interested in. Looking over to USD Canadian dollar, USD Canadian dollar been quite interesting recently as well. So we've had some nice moves on USD Canadian dollar. Let me just put that. Okay, that's interesting. So you can see here, this was one of the trade setups that we had just on Friday, and we've come off a price action level. You can see that we've got a doji dragon candlestick there. We've been able to come up and just ride it for a quick 44-point trade. We then reversed when gold and silver spiked on non-farm payroll. USD Canadian dollar has come down all the way back again, and you can see here where it's just come all the way back down. It's retested this this price action level. We're actually getting some support at the moment. This is a supportive candlestick that we're getting a doji forming, dragonfly doji actually, to be precise, as the price is coming down to just a bit of a knee-jerk reaction. Probably the price has broken through that price action level and buyers are coming back in the market. Obviously, if gold and silver continue to weaken today, you will see USD Canadian dollar put in a bit of recovery. If gold and silver do bounce back and rally, USD Canadian dollar, you would expect, just in terms of their inverse relationship, to sell off somewhat. Okay, so that's what we're looking at there. If I take you back to, just our that's silver, just our gold charts. What we're going to do, we actually have a look at the overall trend here as well. So at the moment, gold, it's still staying within this this downtrend. Currently, we haven't broken out of this downtrend, although we did have a nice move on Friday. It still wasn't enough really to break us out of this downtrend that we've been in since the end of September. So really we do need to break above this the 1680s to 1690 level to really confirm that we are starting to get a solid foundation on gold, and we're potentially going to go higher in 2013. At the moment, we are intending to consolidate. We are certainly supporting this level around the 1660 level. 1650 to 1660 has only really been broken once so far in 2013, and we are starting to see just the prices consolidating at the moment. Very news-driven markets at the moment, guys, so we probably really need some sort of additional major news, and we'll go through what news is going to be occurring later on in the week to really push the prices higher or lower on gold and silver currently. So we'll probably see more consolidating. So if we actually go to our daily time frame here, and we do the same thing for, just bear with me, we do the same thing on silver. We've actually got a live trading video where we traded this on the Federal Reserve. We caught a nice £2,000 trade to selling off just from this key level of resistance. Again, we'll give you the details of where you can find that YouTube video at the end, just from our Federal Reserve announcement. But we've respected, we actually came down with pinpoint accuracy. We tested this level of resistance just last week. We sold down. We came down to a key price action level of 30.75, where you can see traders, they took profits at this level. We then reversed, and we've retested this level of resistance, this downward trend. You know other traders are watching it, because look how well this downtrend has been supporting as our resistance at the moment on silver, and we're currently starting to see a bit of weakness as we start off the week on gold and silver there. Okay, so just want to, this is silver really, how we traded silver, especially in the Federal Reserve non-farm payroll. And it's just to say really, the channels that we've got, the various price action levels we got, the indicators we use, if you don't have them for trading your gold and silver, they are very important. You can see how well the price actually does move off these certain levels. It really is critical for being profitable with gold, silver, commodity currencies trading. So the lighthouse indicator that we're currently using within our strategies, we'll talk a little bit more about that at the end and how you can find out more, but I would just say generally you really do need these key indicators to be able to trade these markets. They are fantastic for commodity currencies and gold and silver. Even this morning you're seeing some key price action levels. You can see here where the price just came up and just sold off exactly at this channel which we've got. So Let's have a look at what news is coming forward in the week ahead, because it's going to be very important for our trading this week. And but have a look at gold and silver at very interesting levels just this morning, as you can see. So every day is presenting obviously new opportunities. Okay, so the week ahead, so the key events looking forward. And okay, Ray, you're just asking, sorry, just a quick question from Ray there. Yeah, Ray, the key indicator that we use is a lighthouse indicator. So we'll talk you through that in just a second. So the week ahead, the key events looking forward. On Monday the 4th of February, today, this evening in fact, we've got the, for those trading the Australian US dollar, we've got the AUD interest rate decision. So that's the Reserve Bank of Australia comes to consensus on where to set the rate. So traders watch interest rate changes closely, as short-term interest rates are the primary factor in currency valuation. So a higher than expected rate is bullish for the Australian US dollar, a lower than expected rate is bearish for the Australian US dollar. So if you're trading this market, do pay attention at 10:30 tonight if you're in any trades. Wednesday this week at 10 a.m. we have the CAD IV PMI. So this is the IV Purchasing Managers Index, measures the activity level of purchasing managers in Canada. So this is important for your USD CAD trades to Wednesday at 10 a.m. Higher than expected readings should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish. That's important because of the inverse relationship to the gold price. So they tend to move in opposite directions. Gold price is rallying, CAD is usually going down. CAD is rallying, gold price is normally going down, and vice versa. Thursday, 7th of February, 7:45 a.m. we have the Euro interest rate decision. That will of course affect any Euro trades that you've currently got. It's a higher than expected rate, should be taken as bullish for the Euro, while a lower than expected rate is bearish for the Euro. We have Thursday, 8:30 a.m. we have the European Central Bank press conference. Again, this will affect any trades that you've got linked to the Euro. So for your Euro Japanese Yen or Euro USD, this does have some impact on gold and silver. We're not seeing as strong correlation with Euro with gold and silver for 2013 as we were seeing in 2012, but we still want to be mindful of the ECB of European news for our trading, particularly for our Forex trading. So this press conference is held monthly, about 45 minutes after the minimum bid rate is announced. Press conference examines the factors which affect the ECB's interest rate decision, and that deals with overall economic outlook and inflation. Friday the 8th at 12:30 a.m. so this is important for gold and silver trades. Chinese news, especially CPI and other major Chinese news, does affect gold and silver quite significantly. So if you're in any swing trades or longer term trades on gold and silver, Friday the 8th of December, 12:30 a.m. higher than expected reading should be taken as bullish, and a lower than expected reading should be taken as bearish for the Chinese yen. And Friday the 8th of February, 8:30 a.m. we've got the US trade balance. So this measures the difference in value between imported and exported goods and services over the reported period. So this is important again because the US dollar index is strongly linked inversely to gold and silver. A strong US dollar often causes weakness in gold and silver, and a weak Euro US dollar often causes strength in gold and silver. So higher than expected reading should be taken as bullish, while a lower than expected reading should be taken as bearish. Okay, perfect. Excellent. So we had a couple of questions about our indicator. So the lighthouse indicator is a really customized gold and silver club indicator. It's available exclusively for our traders. All the indicators we use are custom built for our strategies by our developer. Yeah, I mean, in terms of some of you asked about the the live trades that we've had last week, we can very simply, if you get in touch with us, either the email there or you can sign up to our newsletter, we'll send you, you can see the recordings of our live trades that we've certainly done over the last week or so, and how we've profited from the Federal Reserve announcements, non-farm payroll. You can get in touch with us to request information on our gold and silver Forex trader coaching programs. You can get in touch with us at thegoldandsilverclub.com/course form, or contact us at office@thegoldandsilverclub.com. You can call our UK office on 0207 193 0403, or our Asia office at 852-8191-0403. On these webinars, of course, we're not giving you any advice at all. We're not telling you to take any trade setups. We're just doing an overview of the market. That is reserved specifically for our Gold and Silver Club traders. But if you'd like to learn to trade, you can very simply go to our website, thegoldandsilverclub.com, go to Learn to Trade. You can fill out the application form to request more information there, and you can also subscribe to our newsletters. That's at thegoldandsilverclub.com. You can receive our free weekly gold, silver and commodity currency news, live market analysis and prices. So have a great week's trading. Good luck. If you want any questions at all, do contact us on the details just on the screen currently. And we'll see you on the next one. Okay? Thanks, guys. Have a great week. Bye-bye.